Okay, so I'm going to spend some time with you talking about the investor presentation and why I think it's so important. Typically, what happens is as someone going to look to get a project funded, they do a serious data dump. It's all about the data. They don't talk about the project. They don't talk about the macro and micro components of the property. Um, they don't really spend a lot of time on the team and the experiences. So
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey, everybody. Welcome to the Real Estate Pros podcast. I'm your host, Michelle Kesil. Today, I'm joined by someone I'm looking forward to chatting with, Mike Reyna of Barrett Financial, who is a commercial lender. So excited to have you here today, Mike.
I'm excited for you to be my first podcast. This is going to be fun.
Yeah, absolutely. I think our listeners are really going to take something away from how you're approaching people get the right deals and supporting your clients. So let's dive in.
Okay, so I'm going to spend some time with you talking about the investor presentation and why I think it's so important. Typically, what happens is as someone going to look to get a project funded, they do a serious data dump. It's all about the data. They don't talk about the project. They don't talk about the macro and micro components of the property. They don't really spend a lot of time on the team and the experiences. So I'm a little bit different. I encourage my investors to craft a story, articulate a value, most importantly, building trust and try and create long-term relationships with those lenders. The last thing you want to do is have to go to a new lender every time. You want partners that you show that you can prove that you can keep your commitments, you can grow the asset value, you're making money, you're repaying your debt, and you want to move on to the next project, and you want that same partner, lending partner, to walk with you. And in certain cases where they can't walk with you, they created such a relationship where they are comfortable giving out another name for you to contact, and you have an open door to come in. Again, they lead with a lot of financials. The investors want to understand the why, the opportunity, the market, the strategy, how you're going to make this thing work before you get into all the minutiae. Well, how I structure my presentations or my recommendation to clients is to have a clear, concise story. You move from the big picture down to the granular level. You want at the very beginning to create a safe project that you're minimizing risks. Ideally, within the first 15 minutes, the person you're talking to is grab their pen or pencil. They're interested. They want to take notes. It's for lack of a better term, the hook. You want them to be engaged. So I want to spend a little bit of time about why investments don't work and why it's so important to go through this exercise as you go out and look for investment, because you have to be disciplined. You have to be structured. You have to be patient. So I'm going to go through and I'm going to read a little bit some of the common reasons why there's failure. Lack of strategy and focus. You don't have a clear plan, or you're chasing too many opportunities. Michelle, if you've ever been at a rodeo and you see that little pen for the kids to go find a baby sheep, a lamb, and they're so close to getting that target, that opportunity with that lamb, then they jump to another one and then another one.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
And they don't stay focused and ride that opportunity till it gets to a go, no go situation. And I see that a lot. Poor due diligence. They're rushing through crucial analysis of the property. They just have a gut feeling. And some of this stuff is repetitive, but I think it's so important to hone in on. You have to go through that exercise. You have to go through the due diligence to minimize the risk and make sure that what you're doing is going to lead to being very successful. You don't want to get yourself in a bad financing environment where you're looking at negative leverage and you can't pay your debt covenants. It's just not worth the stress. You're overpaying based on past trends. It used to be great, but not so much anymore. Emotional decisions. Hey, I grew up in this place. It was great. I love it. I know the people. It would be a great place to go invest in an asset. No, you have a lack of diversity. All you have are multifamily, and all you have is in a submarket of an MSA. A lot of folks do that. They're comfortable in that area. And unfortunately, it's not ideal from a diversification perspective. In case you do have a deal that starts to struggle, you can manage through that. Key takeaway for failure in CREs, it all is around the investor's mistakes. It's not about the market collapse. And so the importance of this exercise is twofold. Again, as I stated, to have a presentation available for the investors, but more importantly, making sure the sponsor group understands the risks and how to get through those risks and mitigate them. And I came across this thing from a gentleman named Ben Reinberg back in August of 2024. He did a blog, and I'm going to read what he wrote because I don't want to do a disservice to him. But it's titled, "What are the risks and opportunities in commercial real estate investing?" And the blog's pretty lengthy. It's a nice blog, and it's a really interesting website. I encourage folks to check it out. But he talks about credit risk when tenants can't pay. His response, and the beauty of this to me, was he talked about mitigation and what you can do. We can talk all about why people make mistakes, but how do you avoid those mistakes? How do you prevent them up front? And he talked about diversity of tenant mix. So you have a shopping center. Do you have a national tenant? Do you have someone that's going to bring consumers in that want to spend? That will also potentially look at your other tenants. Strong credit checks, structured leases with protections, personal guarantees, and security deposits. And it's surprising that in some cases, people are so in a hurry to get their occupancy rate up, they don't do some of those things. He talks about exposure to economic downturns. He said, focus on recession-resilient properties like medical and industrial. And again, avoid overexposure to single sector or geographic areas. Sensitivity to leverage or refinancing. Everybody wants to use other people's money. When you can have a conservative loan to value, that's a good thing. Secure fixed financing and maintain a strong DSCR. And we're going to talk about that from a sensitivity analysis later on a couple of times, but it's so important to keep your eye on that DSCR and make sure that when things aren't going well, you're able to maintain that. Rising costs versus static income. He likes triple net leases, escalators tied to CPI, and having realistic budgets around operating expenses. If you have an insurance claim, you know your insurance rates are going to go up. Typically property taxes go up, and you know that. So keep those in mind as you go. He talks about asset prices can swing.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Again, underwrite conservatively and stress test assumptions. Rent growth, operating expenses, occupancy. Know what your break even is on a minimal revenue income line. Know it, memorize it, understand if things are happening that you need to start to move towards that. And determine what would impact that minimum DSCR. Some people say 125, 13. You really want to know what happens to get you down at that point. Savvy investors know that these opportunities, high risk, high reward. You want to minimize the risks. So with that, laying the table out, what I go into with my clients is talking about why this, why now. If we're building out this executive summary, it's a billboard, it's a snapshot, it's a 30,000 foot view of what we're doing. It's the hook, again, to get that investor across the table for you to grab their pen or pencil. It's not about every detail. It's not about, it's just absolute highlights, not what we're buying, where we're buying it, what our ask is, and why we want to partner with them as an investor. It's a big idea. And really, you want to make sure that investor that's looking at you is going, okay, it's worth 15, 30 minutes to listen to this sponsor group talk and what they have to bring to the table. Then we want to talk about your core strategy. So you kind of start to evolve into the details of it. Is it a value add? Is it core plus? Is it a distressed property? Is it ground up construction? And what's the specific secret sauce? Is it the location? Is it the micro environment that this place is in? What's going to happen? When you look at, as an example, one of the examples I use is you have a Class B building that is at a significant discount, and that's because it's in an emerging submarket. Sounds great, right? So what are you doing? Well, we're going to upgrade the common areas and amenities. I think that's going to help level up occupancy, rent rates, and you're creating value. We're going to rebrand it, excuse me. And so one of the things that you want to be able to be prepared to discuss is that J curve. You want a 5-year pro forma that takes you from a bridge environment into permanent financing. And when is that going to occur? So we're spending money today to see benefit in the future. That J curve says in year 3, that's going to happen. And so it's real important that that be part of the deck. Not a lot of that type of minutia in it at the beginning, but it's what you do. Then we go into the macro and the micro picture of the property. What's the population growth? What are the employment trends? Corporations, are they coming in or are they leaving? We had a huge corporation here called AT&T that left that caused some havoc for a little bit in the real estate market, especially in the location that was at. What infrastructure improvements are coming in? Most cities have to talk about it. They have to get approval. You know what's coming. Supply and demand dynamics of where you want to be and how that works. Then we'll look at the micro view. How does this property stack up against direct competitors? Are there other people in there that are in a value add that are doing capital improvements? Have they been successful in that particular area that you want to be in? The demographics of where you're at. Is it student housing? Is it medical staff? Before and after type situation where you have concepts, graphics that show what it's going to look like. And that is, 4 or 5 bullet points that kind of give you what you want to do and you wanted to keep their attention. Then you talk about the T and the numbers, the credibility and the profitability of the deal. People want to investors invest in people as much as they do the properties, and they want to like you, and you want to be likable. And I'll tell you a quick story. A few years back, we had a nanotechnology for cancer, and the scientists that developed it was from a different country, different culture, different personality, and different style.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
So I was on the team. There was probably 7, 8, 9 medical professionals on it. And I came up with the plan with a couple of the other doctors to have him be in the laboratory. And we would do the presentation with the investors. We'd walk him back to the laboratory where he would be in his most comfortable environment, and kind of talk about the technology. Well, he wanted to be in the meetings. They failed miserably. He wasn't likable. I mean, think about it as an investor. Do you want to make a phone call to someone you really don't want to talk to? You don't. And so it tanked it. That nanotechnology for that cancer treatment is still sitting on its shelf because just the scientists unfortunately passed away, and it just sits there. You want to talk about relevancy. What experience do you have? What history do you have with projects that you've acquired? What asset classes are you comfortable with? What did you do? And then, of course, you want to highlight key team members, those folks that are going to lead the presentation and why they're leading it. You certainly could be an alpha man or woman, but you have empathy, you're affable, you're open to mentorship, to being challenged about what you're doing. You know, we'll talk about that a little bit in a minute, but that's all really important. I had a young, one of my colleagues, we were talking about this. She said, dude, just tell them they can't fear the bridge. And I said, what does that mean? Oh, a bridge loan is a 12-month, 18, 24-month loan. You have to perform. There's no short circuiting that one. You have to perform. All the credibility is there. And then it goes back to that pro forma I mentioned. You're going to show how you're going to transfer to a permanent loan. That is very important. And I thought that was very interesting. You want to show safety reserves. Do you have a cap fund? Do you have funds set aside to pay for the interest rate that you're doing during the bridge loan if it exceeds 2 or 3 months before you get permanent financing? Then you want to talk about, for me, the sensitivity and risk analysis, and that's really not negotiable. It's the what ifs. Every deal has risks. Transparency builds trust. So what happens if the occupancy is not there? What happens if you can't get the rental rates that you want? What are you going to do? You have higher CapEx. You got to model these out and their impact on the DSCR. And this is going to just simply show that you're foreshadowing this thing and you're preparing for it and you're not going to be surprised. A lot of people don't do that. They just, this is my plan. This is what's going to happen. We're going to be at a 1.6 DSCR. We're golden. The underwriter is going to chop that up. So get ahead of it. In cases where you can, make that lender part of the mitigation strategy and what they've seen in the past and how they can make it work. And then kind of look at the exit strategy. Again, what are your plans? Are you going to sell it? What's it going to look like 5 years from now? Are you going to keep it for a long-term hold? Then what's the ask? You know, I'm asking for this much money from a bridge in a perm or just a perm. This is the rate I'm looking for. This is the return on the investment we're looking for as we pay you back, and trying to finish up the deal. So it's rather high level, but ultimately the presentation isn't about just selling the property and what you're trying to do. It's about selling the partnership, the vision, long-term relationships as you move forward. You have a narrative beyond just the data points that you're talking about. And ultimately you want to make it easy for Michelle to say, yes, I want to partner with you. I want to invest. I want to move forward. And if we can put those things together, that I think that is going to minimize some of the risk, if not most of the risk, for that investor. And it shows your investor partners that you are looking at this thing holistically.
Awesome. Thank you for sharing all of that, Mike. Guess, like, when it comes to supporting investors, what are you looking to focus on for this year? Do you have any goals for like solving or scaling to the next thing?
Um, it's to continue to share the platform that we have. The fact that we have 2,500 lenders, the fact that these lenders have identified the types of asset class they want to participate in, and that it's a one-time event that we put into an environment that it goes out to these investors automatically, whether it's commercial, credit unions, insurance companies, private equity, those that will do bridge in perm, and really make it easier and simplified from an investment standpoint for commercial.
Got it. Thank you for sharing that.
You're welcome.
So, before we wrap up here, if somebody wants to reach out, connect, learn more about what you're up to, where can people find you and connect with you?
My direct contact number is 210-602-5013. My email is mike.r@barrettfinancial.com. And I'm happy to answer questions, talk to folks, take a look at their project, help them in any way we can to get them their funding as quickly as possible.
Perfect. Well, appreciate your time and your story. Thank you for being here.
Thank you for having me.
Of course. And for the listeners tuning in, if you got value, make sure that you've subscribed. We've got more conversations with operators like Mike who are building real businesses, and we will see you on the next episode.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.